Inflation is silently eating away at your savings and spending power, but don't worry. Today, we're breaking down the most effective ways to protect yourself from rising prices and secure your financial future. Welcome to our channel, where we share practical strategies for saving, investing, and managing money wisely. In this video, we'll explore everything from investing in inflation-resistant assets, using tips, cutting variable expenses, diversifying income, and other expert tips that can help you stay ahead of inflation in 2026. Make sure to hit that subscribe button and turn on notifications so you never miss our money-smart advice that can help you protect your wealth and grow your finances safely. 6. Invest in inflation-protected assets. Investing in assets that tend to rise with inflation is one of the most powerful strategies to preserve your purchasing power. Real estate, stocks, and commodities like gold often increase in value when inflation is high. For beginners, starting small and gradually adding to your portfolio can build long-term security. Dividend-paying stocks provide income that can grow alongside inflation. Real estate investment can generate rental income and appreciation simultaneously. Commodities act as a hedge because their prices usually move with inflationary trends. Exchange-traded funds that track commodities or inflation-protected bonds are another beginner-friendly option. Consistent contributions, even modest amounts, help your investments grow steadily. Diversifying across different asset classes reduces risk and enhances stability. Make sure to monitor economic indicators that influence inflation trends. Consider automated investing or robo-advisors for consistent portfolio management. Balancing risk and reward is key to long-term financial protection. Even small investments can compound and outpace inflation over time. Track your investment performance regularly to adjust strategies when necessary. It's also important to stay patient and avoid panic selling during market volatility. Reinvesting dividends can significantly boost your returns. Focus on long-term trends rather than short-term fluctuations. Review your asset allocation periodically to ensure it aligns with your goals. Educate yourself continually about new inflation hedging opportunities. 5. Tips: Treasury Inflation-Protected Securities. Investing in assets that tend to rise with inflation is one of the most powerful strategies to preserve your purchasing power. Real estate, stocks, and commodities like gold often increase in value when inflation is high. For beginners, starting small and gradually adding to your portfolio can build long-term security. Dividend-paying stocks provide income that can grow alongside inflation. Real estate investment can generate rental income and appreciation simultaneously. Commodities act as a hedge because their prices usually move with inflationary trends. Exchange-traded funds that track commodities or inflation-protected bonds are another beginner-friendly option. Consistent contributions, even modest amounts, help your investments grow steadily. Diversifying across different asset classes reduces risk and enhances stability. Make sure to monitor economic indicators that influence inflation trends. Consider automated investing or robo-advisors for consistent portfolio management. Balancing risk and reward is key to long-term financial protection. Even small investments can compound and outpace inflation over time. Track your investment performance regularly to adjust strategies when necessary. Stay patient and avoid reacting impulsively to short-term market changes. Reinvesting dividends or rental income accelerates growth. Keep learning about economic cycles and how they impact asset values. Regularly review your portfolio to ensure it aligns with your long-term goals. Understand the tax implications of each investment type to maximize returns. Building an inflation-resistant portfolio is a marathon, not a sprint. 4. Cut variable expenses. Reducing variable expenses is one of the fastest ways to protect your finances from inflation. Tracking your spending helps identify areas where you can cut back without sacrificing quality of life. Start by analyzing grocery, dining, transportation, and entertainment costs. Small daily savings accumulate over months, creating a buffer against rising prices. Eliminating unnecessary subscriptions or services frees up money for essentials. Using coupons, cashback apps, and discount programs maximizes value for each purchase. Consider bulk buying for non-perishable items to lower costs over time. Cooking at home rather than eating out reduces expenses significantly. Energy efficiency, like lowering utility bills, is another impactful strategy. Reducing impulse purchases keeps your budget under control. Automating savings ensures you are consistently protecting your income. Avoid lifestyle inflation as prices rise. Maintaining financial discipline. Comparing prices and using loyalty programs saves more than expected. Planning meals ahead reduces waste and unnecessary spending. Reassessing recurring bills regularly can uncover hidden savings. Using public transportation or carpooling lowers commuting costs. Buying seasonal produce and local products often costs less. Taking advantage of community discounts or student/senior deals can add up. Setting weekly spending limits creates awareness and discipline. 3. Diversify your income sources. Relying on a single income stream during inflation is risky because purchasing power can decline rapidly. Diversifying income through side hustles, freelancing, rental properties, or online businesses creates financial security. Beginners can start small with gig work or freelance opportunities to supplement their primary income. Investing in passive income streams, like dividend stocks, ensures earnings even during economic downturns. Multiple income sources provide stability when inflation spikes or unexpected expenses arise. Developing skills that generate additional income improves career resilience. Passive income helps cover living costs while your savings grow. Combining traditional employment with investments builds a safety net against inflation. Diversified income also allows for reinvestment in inflation-resistant assets. Beginners should research opportunities that align with their skills and interests. Over time, side income can become substantial, offering independence and flexibility. Having multiple revenue streams reduces dependence on one source and spreads risk. Income diversification encourages creative thinking and entrepreneurial growth. It builds confidence in managing finances effectively. 2. Invest in commodities. Commodities like gold, silver, oil, and agricultural products tend to rise in value when inflation increases, making them a natural hedge. Investing in commodities provides a tangible asset that protects wealth from currency devaluation. Beginners can use ETFs or mutual funds to gain exposure without managing physical assets. Gold is historically a safe haven during inflationary periods, offering stability to portfolios. Diversifying across multiple commodities reduces risk while increasing potential gains. Understanding market trends and supply-demand factors improves investment decisions. Commodities can be volatile, so long-term perspective is essential for beginners. Even small allocations in commodities enhance portfolio resilience. Trading platforms make access to commodities easier than ever. Combining commodities with stocks, real estate, and bonds strengthens overall protection. Regularly reviewing commodity performance ensures alignment with inflation trends. Avoid speculative trades without proper research or guidance. 1. Increase financial literacy. Knowledge is your strongest defense against inflation because it empowers better financial decisions. Understanding how inflation affects prices, investments, and savings enables proactive planning. Beginners should study budgeting, investing, and risk management to navigate rising costs confidently. Financial literacy helps identify opportunities to grow income and reduce expenses. Learning about different asset classes improves diversification decisions. Following reputable financial news and educational resources ensures awareness of economic trends. Knowledge reduces panic during market volatility, allowing rational responses. Using online courses, books, and expert insights accelerates understanding. Understanding tax implications of investments optimizes returns. Beginners can leverage financial literacy to choose appropriate credit, loans, and insurance. Awareness of inflation trends guides spending and investment choices. Developing a habit of reviewing finances regularly improves long-term outcomes. Thank you for watching our comprehensive guide on how to protect yourself from inflation in 2026. We've explored strategies like investing in inflation-resistant assets, using tips, cutting variable expenses, diversifying income, commodities, and boosting financial literacy. Remember, protecting your purchasing power now ensures a more secure financial future. And combining these strategies will give you the confidence to weather rising prices without stress. Stay disciplined, informed, and proactive with your finances to maintain control and grow wealth. Subscribe today and turn on notifications to never miss actionable tips that can safeguard your money and accelerate your financial growth.